Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, here with Joel Elconin and Dennis Dick. On the show today, we've got some earnings, we've got some ratings, but Tesla is at a new all-time high. The question, I guess, is not will it get to 400. The question is will it get to 420. We'll talk about that. Dennis has some other stocks hitting key levels today, so we'll get through those as well. We'll take some questions from our chat and our guest at 8:35. We are joined by Ian Weiner. He is an advisory board member at Bellator Asset Management, and he will give us his thoughts on this market. Joel, what's the word here overnight?
We're down 2.75 handles at 31.9650. Crude is down 2 cents at 60.83. Gold is basically flat at 14.79, and silver's in the red by 2.9 cents at 17.02.
Okay. Dennis, how you doing this morning?
This has been one of those mornings, guys. I can tell Joel's having one of those mornings too, but let's jump right into it. The markets are actually flat here this morning. We've got individual movers. A little bit if I'm just looking at the stocks themselves, just kind of taking an overview this morning. I see tech a little bit weaker, but overall here, it's very quiet. We're starting to get into a little bit of holiday trade. I mean, even if you look at the ranges from the last couple of days, it really feels like we're definitely starting to get in the holiday trade. I mean, S&P's the last 2 days, 75-cent range, 75-cent range. It's actually interesting, almost identical ranges. Joel, thoughts on that as we look at SPY? At least the SPY. I know the overnight session might have went different, but the SPY, the last days are almost identical.
Same here in the S&P's consolidation after a big move up. May have some movement tomorrow on the quad wedge, but just consolidation, can't keep going up every day.
So let's jump over into individual stock stories here. The big earnings from last night was Micron. It has the chips trading higher. Again, the news algo going the wrong direction because on the initial numbers, they slam it. About 20 seconds later, they said, no, that's the wrong direction. We're going to buy it here now. Give us the details here, Spencer, on the report. Joel, jump into that after hours action.
Right, so the earnings they gave were fine, 48 cents EPS. That is in line with the estimate. Sales of 5.14 billion versus 5.03 billion, so beat on the sales figure. For their Q1 numbers, they gave some Q2 guidance as well. EPS guidance range 29 to 41 cents. 41 cents was the estimate there. Sales 4.5 to 4.8 billion. That is in line. So I guess you could say a little bit light on the EPS guidance, but in line or good on the Q1 earnings.
Joel, on this tape last night, bring up the after hours chart. You'll see what I'm talking about. I believe I saw 51 handle on Micron, and it was only down there. You had to have an order out to get that done because it was only down there for about 20 seconds. News algo, again, just throwing money away, wrong way. And boom, right back up, and then they started ripping it higher. I'm not sure what they read half the time when they're going the wrong direction, but we know there's been a lot of instances where it seems like on the initial print that the trade's going the wrong direction. And here we are, we're trading now 4 points higher from the after hours low.
51, you did just kiss 51, really not much there. 51.21 is your after hours low. And on that same bar, you made your after hours high 55.59, and then you bumped up against it for the rest of the after hours session and the pre-market session. So you got a little seller up there. So that's what you got to do. You got to get it to 55.59, maybe take a look at 56.
Jumping back over to the earnings parade here. So quite a few stocks reporting this morning. I'm going to skip over Pier 1 from last night, but I don't think anybody cares about that one. CCL we're still waiting on, I believe, but we did have Darden, and it's disappointing, and it's down $5. And this is a big move for your Red Lobster, I guess, Olive Garden now. DRI trading down 5 points.
Well, they don't own Red Lobster anymore.
That's why I said I guess Olive Garden now, because I already said it was the Red Lobster Olive Garden combo, but I guess it's mainly Olive Garden now.
It's Olive Garden mainly and Longhorn Steakhouse. But so the Q2 EPS here, or adjusted EPS for DRI, is $1.12 versus $1.07 estimate. So they beat that number. Sales in line, $2.06 billion. They also reaffirmed their guidance for the fiscal 2020 year. Adjusted EPS in a range, mid $6 range. Sales growth 5.3 to 6.3%. So nothing bad in the headlines. Their earnings beat and a guidance reaffirmation.
Stock trade down $5. A big level down here. If you get down there, 108.57. You had a double bottom, 108.58, 108.57 from October 22nd and October 23rd. It's 3 points away from there, so I'm not sure you're going to get there. Probably the 110 psychological level comes in before that. I didn't see. I think we're actually sitting near the pre-market lows, so we're still kind of digesting here.
Yep, this chart reminds me of the FedEx chart from yesterday. It's just hanging out near the pre-market lows, not showing any sign of bouncing. Your actual pre-market low is 110.55. Dennis gave you some good levels on the downside. You had a 110.10 low, and then I like those pair lows at 108.58, 108.57. So sitting there, sure looks like it has, unless someone wants to step up and be a hero, looks like we got some more work to do on the downside in DRI.
Go in the opposite direction. Conagra Foods, CAG, they look like they report a pretty good quarter. Mr. Israel.
Yeah, it was a good quarter for CAG. Q2 adjusted EPS 63 cents versus a 57-cent estimate. Sales 2.82 versus $2.8 billion. So a beat and a beat. However, they cut their fiscal year 20 EPS guidance. They cut it by, actually, they really didn't cut it that much. It's only a couple cents here. So it's still in line with the estimate. So I don't know how bad of a cut. That's not really a cut at all, actually. They cut it by like a penny. So I don't know. EPS beats, sales beat, guidance in line.
Stock trading up $2 here. Big pop for Conagra Foods. We saw a pretty good pop with General Mills yesterday. It opened up and then it tanked and gave it all back. And then by the end of the day, it crawled its way back anyways. So still on GIS, 54 is the big number. I don't have my book open to give you any levels here on Conagra. CAG, at least not right now. JB Specs there, maybe he can see something in the book. I'll just say when we got up back in September, we went up close to 32, 31.83. So I would think that's going to be a major resistance point, at least for the stock.
I'm sorry, what level did you say?
I said 31.83.
Yeah, exactly. Pre-market high 31.75, that 31.83 high. Not sure we hit that at the end of September, fell back to close at 31, and that was really a short-term top there in the market. We have backed off, so 31.75, 31.83, major sell zone here, 70 cents away, and I don't know. Can get up there, probably more size at 32, the way it acted when it got up in that upper 31 handle. Hard to pick a spot on the downside where to buy it.
Jump back over to the earnings parade. Let's do Accenture.
ACN reporting this morning Q1 EPS $2.09 versus a $2 estimate. Sales 11.35 versus $11.14 billion. So a beat and a beat for Accenture in the first quarter. They gave some guidance as well. The Q2 sales guidance was in line. They narrowed the range on their full year EPS guidance, but it is still in line with estimates. So basically what you want to see, a beat, and guidance in line.
Was trading up last night ahead of the report. But if you look, it's been straight down ever since. Is that candle right? Did this hit 193? That can't be right. Is that right?
I do not have that on my platform.
Okay. I'm just looking at the after hours chart there and I see, oh no, I'm looking at the bar. Sorry. Why is it? Oh, it's from,
it's separating the bracket.
Yeah. I'm just looking through here. So we're just leaking here right now, 203. Sorry, we'll strike that from the tape there. I was just looking at the chart. I did not see that either. I was just looking at the chart. I looked wrong.
Okay.
Eyes are buggy. The glaucoma vision getting me here again. But 203 is where we're trading here right now. We're wide open. I mean, we're 205 offer. We're 201 bid. So this thing is just wide right now. Price discovery still happening. I'd say $200 is important for this to hold though.
Yep, right there. This one I was going to say it was like near 205 when I first looked at it, and then it got hit. So yesterday's low that came in at, I believe, 205 area. No, I'm wrong. 203.51 was yesterday's low in ACN. You're trading in that area. So 203, you had to keep an eye on that. 351, 0296, and then go back 4 days ago, you had a 0301 low. So I don't know. This kind of had a big rally. They're not taking it up after the report. Kind of looks like this thing has a date with 200 or below.
What about Rite Aid here?
Yeah, Rite Aid's getting a nice pop. RAD.
I mean,
big pop here. Maybe a little bit of a squeeze too. How'd they do?
CVS beats, and Rite Aid says, okay, I see your beat and I raise. Q3 EPS 54 cents versus 28 cents in the same quarter last year. Sales 5.46 versus $5.42 billion. So a slight beat on that Q3 sales print. The guidance they gave was strong. They gave a full year 20 EPS guidance range of 13 cents to 55 cents. That's a big range. 13 cents to 55 cents, but 5 cents was the estimate there. So they're beating that. Sales guidance for the year, 21.5 to just under $30 billion is their range. That's in line. So a strong earnings beat and a full year 20 EPS guidance estimate beat.
Come this far, let's see if you could test $11. 11.01 was your high on November 6th. You had a 10.92 high. So, boy, 11 potential resistance area. And then if, in fact, it could get through that, you had a high at 11.43 and 11.50. But, boy, this still has some work to do to get through 11. So I'll use that as resistance. And hard to pick a spot when the stock's up 27% to pick it on the buy side, but we'll see what happens. Maybe $10 psychological level, but
it's hard because it's thin too, and the reverse splits have come into play here. You know, if you go and you look out there, obviously the stock, you know, on the reverse split basis was a lot higher back at just even in 2015, 2016. It's thin. So you get an okay quarter, thin stock, and do some funny things. I'm hands off. It's too thin for me to trade it. Jumping over, that's pretty much the bulk of the earnings
that about wraps up the earnings that we've already got.
Yeah.
Looking ahead to today, or after the close at least, Nike
that's the big one.
Obviously the big one. There are a couple others, but Nike is the big one here. I guess I'll just give you the estimates here from Nike that we're looking for. EPS of 57 cents on sales of $10.07 billion. So this will, when does Nike historically come out? I want to say it's around, let's see, we can look in the pro. Nike, it's historically at 4:15. So look for the report somewhere in the or at 4:15 based on at least the past few quarters here. It's run.
It has run. That's the one thing we always talk about when they run into earnings. They've got to blow it away to go higher. Stock is kind of loved though. So even if it pulls back, I think you're going to probably find buyers on the dip, but it all depends on the numbers. But Nike's been impressive. I mean, it's through the $100 psychological level here now. So it's all going to depend on the report tonight.
Yeah, I have to agree. Nice run ahead of the report. So they'll blow it away. I'm sure there'll be some good action in it, trading up 33 cents here. And what was the high from yesterday? If anyone's looking to trim ahead of the report, we're above yesterday's high, 100.71. So that's a gap fill if you want to try and buy it there. Old time closing high from yesterday is what I'd keep an eye on, 100.57.
So moving away from the earnings just for a little bit there, and we'll get to the ratings here in a second too. But again, I just want to jump into big levels here that, you know, I've been noticing. We gave you a bunch yesterday. We talked about the Merc at 90. That is still obviously there because it hasn't taken it out. It did get up there yesterday and came close to taking out 90. Again, kissed it right on the button. So these big levels just work sometimes. If you're interested, Home Depot 220 is a big level here. I'm just going to run through them. If you see someone you like and want to talk about, Joel, let me know. Again, Bristol Myers from the other day, I'm going to talk about 65 being a big level. General Mills did not take out the size of 54 yesterday, so that is still there. It's trading up slightly here in the pre-market, but I would expect You'd have some resistance as you get upwards towards the upper 54s, just like we had yesterday on GIS. We can jump over to Johnson & Johnson, 145, big size up there. Schlumberger came close to these levels, just worked 40. It kissed it yesterday and did not get over it. So SLB, if you're trading, huge level there and huge size sitting up there at $40. iRobot, we talked about the $50 level. It did take it out yesterday. I'm still long that in the long-term portfolio. And then Eli Lilly, 130. Again, these stocks just kissing these levels, 129.98, not getting through it. So this morning, maybe it's getting a running start on it, but Lilly is big at 130.
JV Specs adding 80,000 shares offered at 101. And Nike, 90,000 shares.
Wow, that's big too.
Yep, at 102.5. And just an interesting note here from Coin Collector. He says he streams the show on his Peloton doing a scenic view ride in the Alps. And I just want to say that we did get our Peloton yesterday.
How was it? How is it? Did you try it out?
No, I did not. But Lisa did this morning, and she's in good shape. And she didn't do the beginner ride. She did a country music ride, and she said it kicked her butt. It kicked her butt.
Wait, explain the country music ride.
Yeah. I want to know what the country music ride's all about.
Well, come on. It's simple. You are doing a workout to country music. And this girl was working out. It was a hard workout.
But there's video too, right? So what is it? Yeah. Just like videos of people singing country music?
No, there's a video of a girl on a bike.
Instructing,
and then there's people in the background. And then you pick, your scenic, like Coin Collector did a ride in the Alps. And you can pick different music genres. So she did country. She likes country music. And it was a really hard workout. She was sweating after it. So maybe I'll try it tomorrow.
So you're bullish.
I'm bullish to Peloton. Oh, and there's other things you can do on there. Yep.
We got to get the Joel review once you use it.
I should have brought my shoes in.
I should come over and use it, and then you could get the Dennis review too. But you know what? The normal treadmill kicks my butt, so I'm sure the Peloton will really kick my butt.
Yeah. Let's talk about. Can we talk about Tesla here? Although, actually,
unreal.
Joel, did you have any thoughts?
Squeeze them, squeeze everyone.
No,
just keep squeezing. Okay. Never stop squeezing in Tesla. That's what's basically happening here. The squeeze just continues.
Why can't it be just a natural rally? Why does it have to be a short squeeze?
It started as a short squeeze. It's everything now. So it's not even just a short squeeze, Spencer. It's a panic buying rally here now. I mean, you got Kramer on Mad Money. Buy. Just pounding the table on Tesla here. I mean, we love you, Jim, but we didn't hear anything from you at 180, 190, 200. And now all of a sudden at 393, we're hitting the buy button. Kind of doing it backwards in my opinion, but at the same time, the trend is your friend. If you're long this thing, I don't see why it doesn't get to 400 today. It's been just an impressive move. We've been bullish it for a long time. I've never had the stomach to hold the stock myself, but I think we're going through 400 probably today. Does it get the old 400, go 402, 403, sneak a few people in there and then pull back from there? That's still to be determined. I'm not going to try to call the top on this thing, though. It is just hot, and there is still people short. I mean, what's the short interest still? Think about if you were short this, Spencer. What would you be doing? Besides sitting on the toilet all day because you're got so much anxiety from it. What else?
Short percent of float is 21%.
So it's went down. It was like at 30%. So some of these shorts have squeezed out, but it's still 21%. There's still some significant people that are getting the hell squeezed out of them on this.
But like, how many of these shorts are like large institutions that can't just like sell like that?
That's dead. It's hard. It's hard to get out of these things a lot of times. So I agree with you. It's very hard to work out of big positions and stuff like this. And, and you're looking here, and do you really want to stomach, finally, just after all this time, eating it up at the all-time highs at 393? I mean, we're at all-time highs. Who would have thought when we were in the summer and so many people are saying, oh, Tesla's a zero. And that's when I put the non-bankruptcy trade, and I said, I don't know if it's a $400 stock, but I don't think it's a zero. And that's when I wrote the 120 puts. I wish I would have held it. And Jeremy Newsom was in that trade with me too. He wrote a couple more times, though. I just wrote it once. I should have, obviously reinitiated, and I never did. I've been waiting for a pullback to reinitiate my put sales, and there's been no real pullback to be had. The stock, we did have the little bit, on the whole broken glass incident there with the ugly truck. But, you know, since then, and we talked about it starting around even back then and saying, man, it looks like it's going to go again. And it did. This thing has been basically performing technically very well.
Pre-market high comes in at 398.46. You just got up there again and hit 398. I'm staying corrected, 398.47. Easy target on the upside, 400. Really, it's a NASDAQ stock. You can't talk size. So let's see what happens.
You can if that's in the ARCA book or the
Yeah, the
NSDQ
ARCA
book, but you just don't see as much size on those.
Yeah, 39 as I could give you is 398.47. That's so far as your pre-market high. That's only $2 away. So that could easily be taken out. 400 psychological, and everyone's saying 420.
How crazy would it be? Yeah, 420. How crazy would it be if it gets to 420 this year, right? If
it could easily do it.
If a few months after the 420 tweet, it ends the year at 420. I mean, that's karmic.
Think about everything that it's went through. I mean, oh, Musk, we got to put this guy in jail because of this tweet. There's all people pounding the table to like arrest this person, and they're burning cash so fast. I mean, all those arguments. I mean, and we've said this before. If they start to continue to produce positive cash flow here, what's the bear argument? The technology is good. The cars are awesome. I think the truck is ugly, but apparently other people don't. Even my brother-in-law was saying that he thinks the truck's okay and he would consider buying it. So some people actually like the ugly truck. I don't personally. But you know what? You look at here and it's hard to get bullish here now. I mean, if you're getting bullish now, I feel like you're way late to the party. There was so many times to get bullish. Jason Raznick from obviously Benzinga has been all over this trade the whole time. He's come on the show multiple times when the stock was 300, when the stock was 250, and just say buy it. And he's been proven right here. And it was probably not fun for him when it's down in May and June when the stock gave back 30% here. But since then, it's been a lot of fun. And since that earnings report where they obviously made some money, it's been straight up. And that's because those arguments of, burning cash don't work very well when the stock's not burning cash. Maybe it starts burning cash again. And, the bears are trying to say they're cooking the books and doing all these other things, but let's call a spade a spade. It was a really good quarter.
And, he's laid off to Twitter. He
has cleaned himself up a little bit.
The single biggest factor in this rally is he has just let the market dynamics work on its own, and he hasn't come out. I mean, the court injunctions or whatever, the hearings, he's staying off it and showing a little bit of discipline.
Good for him. And good for Tesla. I'm happy for the Tesla bulls because you know what? They've had to stomach a lot of stuff through all this. So I was a closet bull the whole time. I was long it a couple times, couldn't stomach, like I said. So I decided to do it through the put rights and made it a little bit easier to stomach. But at the same time, I mean, this stock has just, been an unbelievable performer in the back half of the year.
Yeah,
horrible first half of the year, awesome back half of the year. So congratulations, bulls.
What a 12 months. I just look at the 12
unbelievable
from 370
completely hated in the summer. Yeah,
from 370 to 170,
200-point fall, 50% fall.
It's crazy.
You know what would really make it fun if they did like a 10-for-1 stock split. Make it a $40 stock.
They don't do those that much anymore.
No,
I
they
used
don't.
to see stock splits when me and Joel started trading back, and Joel started in the 1950s.
40.
But when I started trading in 1999, it was very commonplace. Stock gets over $100, 120 to do a stock split. It's the cool thing to have the high price stocks. I mean, we're trading fractions of a share even right now. So, you used to say, oh, well, the small investors can't participate. Well, if fractions of a share, they can participate. Yeah, they can buy a fraction of an Amazon share here now. So that argument's off the table. It's just the cool thing to have the high stock price. So you just don't see the splits like you used to. Warren Buffett was always a believer that never split the stock. And the reason he said that is because it costs money and it obviously does nothing. There's no point to it is what he said, which, maybe he's right. And obviously I thought the only point was, you get smaller investors participating because they don't want to come in and buy $1,000 stock. I always liked it as a trader because I don't like trading the $1,000 stocks with the 2-point spreads either. But I mean, there's cost of split stocks, so you just don't see it very much anymore.
Maybe they don't want their stock being traded, right? They want it being held.
Well, that's some people. That's true too. There's that. That's very true, Spencer. I think you've got some people that really believe that we don't want to, you know, and obviously you've even got, you know, politicians that believe that trading is bad. You know, when they're talking about putting a trading tax on, they believe that, you know, the speculator is evil. There's people that actually believe that out there. They don't understand the fundamentals of liquidity, where speculators are the bulk of your liquidity every single day. And that's how you get in and out. The speculator allows you to get in. You know, they just look at it and they say, all this volatility, oh, it's the speculators that are moving the stocks around. Without speculation, I tell you, the stocks would move around a lot more because you wouldn't have any liquidity. So, but there's people, you know, that seriously believe that they don't want their stock traded. Companies believe they don't want their stocks actively traded either. Well, we know when you go to sell your shares, you're selling usually to a speculator when you're selling to the open market, unless you're doing, you know, an offering. And even at that, you're doing selling to speculators as well. Speculators allow you to get in and out of the market. So, you know, you day traders out there, you're doing a good job out there. Don't anybody say to you, you do nothing good. You're just a leech on society and you're just siphoning off money. You're providing liquidity to the market, allowing the institution to buy and sell their stock. That is what the day trader and that is what the high frequency trader's purpose is in this market. And it's necessary.
Let's move on here. Dennis, you're losing a relationship trade this morning.
What am I losing?
You're losing the IAC match trade.
So what is happening here? Tell me.
They're splitting up. IAC will receive $3 per share in consideration for the separation. Match Group is separating itself from IAC.
And that sucks. Obviously, they're both moving still together here this morning. I love this relationship, and I've traded this relationship and made money from this relationship for a long time. So disappointed that they keep taking relationships away from me. I love when we had AABA BABA, that one was a good one. This match IAC is a good one. They don't like me. Why is the market picking on me?
It's good for both. Well, IAC is up on very light volume. I only see 214 shares traded, up 479 to 226. Match is up $1.86 at 73.10. Let's see what we can levels on IAC here, 226. Your 2-day high may come into play if you're looking for a potential resistance area. Just look at your 2 and 3 days highs, 27.38, 28.15, and then for MTCH, I like this a little bit better. It got excited, got up to 75, and someone said enough is enough already. So there's your offer. 75 is your resistance. Do we have any daily levels there? Yeah, we got a pair of highs at 74.76 and 74.92. So let's see if you get back up to 75 here in MTCH.
And then another.
Yeah.
I was going to move on to another deal.
Sure, let's do it.
TIVO is combining with XPER, ticker TIVO, and XPER. They are combining into one company. They're going to merge at a fixed ratio of 0.455. So TiVo shareholders will get 53% of this new company, 53.5% actually, and XPER shareholders will get the remaining 46.5% of the combined entity.
Risk arbs bringing it right in here. So what's my ratio? So I get a new deal to trade. What's my ratio?
0.455.
0.455. So your risk arb traders out there, write that one down. 0.455 shares of your XPER is going to be equal to one of your TiVos. And if we look this morning, TiVo is trading up and XPER is trading down significantly. So they're already bringing that relationship nicely in.
Yeah, TiVo got a little poppy. I'm surprised the stock's still around. Had a bunch of resistance at 835, 845. Snuck through that in the pre-market, getting up to 876. But stick with the ratio and trade it that way. That's what it's going to be trading for a while.
Yeah, I think we were saying earlier that TiVo is around for their technology, like they're the IP that they have, right? Because they were sort of very early in the digital recording, I guess you can maybe call it streaming space. Not sure. But I mean, they're the precursor to the DVR. So I don't know anyone that has a TiVo, but I'm pretty sure they're just around.
That's why it's all just built in or to our DVR. So they were the first DVR. And
right. It's
I
just,
mean, this is kind of like, I don't want to compare Roku to TiVo here, but there is, some comparisons that you can
there's
draw.
Probably some technology that overlaps, right?
Yeah, and I'm just saying is, you had the TiVo, which was your first, this is the way you can record, and it was TiVo, and everybody's going on again TiVo. Well, then they incorporated it all into the TVs, and then you don't need TiVo anymore. And we saw, TiVo stock. What's the all-time high in TiVo, Joel?
I'm going to have to go to the monthly.
Go way out.
And in 2000, TiVo traded at 137.
There you go. So long term, this is kind of my feeling for Roku. Sorry, Bulls. And I still, and on short term, I still think Roku. And I even have a position in Roku. So I just think long term, and I still, like I was saying, I think Roku short term, they're still going to have a good quarter. I think they're still, it's still there. Just long term, I'd just be scared to hold this in my long term portfolio. That's my argument.
I think that's a fair comparison to make.
I think so too.
All right, 8:31 here. Got about 4 minutes left before we're going to grab today's guest, Ian Weiner, like I mentioned at the top, advisory board member at Bellator Asset Management. In the meantime, let's get to some ratings here because there are. I feel like we're like at the very end of the rating season here. It's going to be really quiet for the next couple of weeks. So this is kind of I feel like it's our last chance to discuss good, interesting ratings. And we have a couple this morning. I guess we'll start with Johnson & Johnson. They are catching an upgrade this morning as I pull them up from Barclays to overweight, and they're raising their price target from 140 to 173.
What stock was that one?
J&J.
So they're upgraded again today?
Yep.
What is with these back-to-back-to-back upgrades? 145, we talked about this level already. It's where the size is in the book. That's the level that the stock is going to find resistance at, in my opinion. Let's see what it does there.
Trading up 81 cents here at 144, taking out that high from yesterday. Your 2-day high was 144.05. So maybe if it opens up and holds 145, then maybe look 144. Look for that size at 145. Not much in here to talk about and what is this? We do have an all-time high though. All-time high if you want to hold out here for another upgrade or two. Back in November and December of last year, about a year ago, you hit 148.75 and 148.99. So there's your all-time highs. Still a little ways to go, but that target at 175, I mean, maybe they're looking for another move here that we just had from 132 to 144. You're going to need another 3 of those moves, which would just be way out of character here for Johnson & Johnson. But as we know, anything can happen in this market.
And then, so we talked about Barclays upgrading J&J. They're also upgrading Cisco this morning to overweight, giving CSCO a $53 price target.
Nice pop for Cisco. I'm still long this in the long-term account. It's starting to show some life, but I'm going to tell you, you're going to run into resistance up at 48. So, it's fun. It's looking like it's, been moving pretty good here, but major resistance up here at 48.
Just a gap to fill. People are waiting for that gap fill, 48.15. You have a gap between 46 and 48.15. Working its way through there. No reference points to look at in between, trading up 48 cents, right at the highs of the pre-market session. So bids and offers right there. Price discovery still going on. Let's see what happens at 48.
All right, let's bring on our guest today. Ian Weiner, as I mentioned, he is an advisory board member at Bellator Asset Management, also the author of Ubiquitous, Relativity. Ian, good morning.
Good morning, guys. How are you?
Doing well. How about yourself?
Can't complain. It's the holiday season, right?
Holiday season.
You sound like you got a lot of holiday cheer there.
Yeah.
Tell us about your new role here before we get into the markets.
Sure. So I'm on the advisory board of Bellator Asset Management. Bellator is a service-disabled, 100% veteran-owned and operated business. So as a veteran myself, I'm helping them as they kind of build their business. It's a long-short hedge fund with some focus on syndicate. And so it's just a good opportunity for me to stay involved and help some guys out, because part of their mission, in addition to obviously trying to produce returns for investors, is to hire veterans and give to veterans charities.
Focus on syndicate. Could you go in a little deeper in that explanation?
Sure. So, there's multiple strategies out there that involve syndicate. The fact that Bellator is a veteran-owned and operated business They have exposure to syndicate that other businesses don't have because they are part of that diversity bucket. And so they have the ability to participate in syndicate in a way that perhaps is different than you would see, in ordinary sort of long-short hedge funds. And so that's part of the strategy. So as fund of funds, as different sort of investors are looking for a way to diversify strategies and have a portfolio of strategies, this is one that if they're looking to invest in a minority / diversity firm, that will necessarily have a different look at syndicate. This is a good way to do that.
Okay, thank you for that explanation. Overall market talk here. One heck of a rally going into year end. Can you identify some of the key factors that you think are driving this rally?
Yeah, so I think there's two things going on. I think the first one is pretty obvious. It's the liquidity. We continue to see central banks take more and more dovish steps, even with the market hitting highs, and the recent, quantitative easing by the Fed and the Treasury bill market, even if they're not calling it that, is yet again just another example of more gas being thrown on the fire by central banks, and they've made it clear that they're not going to do anything with rates for the next year. And the rest of the banks around the world are still in ease mode and continuing to lean dovish. And so from that aspect, that's the biggest thing that's going on. The second thing, which I think is not talked about as much, is positioning. And what I mean by that is you've got a lot of active managers out there, and by active I mean not just mutual funds but hedge funds as well, and who are lagging the broader indexes again. And for some hedge funds, this is the every one of the years for the last decade. But at this point, they need to catch or not miss, I should say, is a better way, the rally. So you've got this, what I refer to as synthetic short base, where people have missed the performance and need as much performance as they can get into the end of the year. So as a result, you have all these funds waiting to buy the dip and not willing to sell stocks. And so that's why every sell-off for the last month has really been, pretty weak and no real follow-through. And so I think that will probably continue into the end of the year and probably in the beginning of next year as people try to position for a better year in 2020. And then after that, we'll see. But I do think those are the two twin factors that are continue to drive this rally higher.
All right, we're talking about the factors behind the rally. Let's talk about some of the biggest risks to the market here in 2020. And boy, oh boy, you got several things here. So I guess we could start with the election, and then you can highlight some of your other potential risks to the market in 2020.
So right now, I would say that the majority of investors, forget about the rest of the overall country for a moment, the majority of the investors think Trump's going to be reelected. And if that's the case, obviously that's bullish, especially relative to the other options. So, we need to keep an eye on that. I don't know how it's going to unfold. I have no way of handicapping that. I do think that if it's a Joe Biden who happens to be elected, that's okay too, but it's not as good as necessarily what we've had the last 4 years, or what we would continue to have with another 4 years of the president. But if you get, obviously, an Elizabeth Warren as the nominee for some reason, you're going to have pressure. You're going to have pressure on the market, pretty much the entire summer and fall, because it's going to ebb and flow with how that looks. And you're just going to have that element of fear out there that, if for some reason she can win, obviously that's a game changer for everything on the business side and the market side. So that's probably, the biggest risk. from a asymmetric perspective. I think there's a few other things that people should at least keep an eye on. This negative divergence in the transports, which just seems to be continuing to go on, and obviously FedEx yesterday was the main culprit. But FedEx sounds terrible. Now we can dismiss that, or we can say, well, this is a pretty big economic indicator globally. So it's not the end of the world, but it should be something that's flagged that, there's clearly an issue in the global economy, in the manufacturing side. Now, the consumer is doing fine as far as I can see, but those are two kind of divergences that are happening. So I think that's one thing we need to keep an eye on. In addition to the election, the other things, the first one is the China deal. I don't really know what's going on here. It's unclear to me what exactly we've gotten out of this, if we've gotten anything. The whole kind of 18-month process to me is still unclear as to what we've done or what happened. I mean, originally I thought the goal was to kind of curb the IP theft and sort of trade secrets. I'm not really sure where we got on that. So that's something to me that you could wake up one morning and you're just going to have kind of the Chinese say, you know what, forget it. We're going to walk for a little while. And I think they know that they have some leverage as we get closer to the election. So I think if they are going to do something that hurts us, it's going to be probably in the spring or summer as they say, okay, well, we're going to put Trump's foot to the fire and really hurt the country into the election. That's something to keep an eye on. And then finally, a statistic that I've been looking at, which I think is alarming, is if you look at the CapEx, right, and everybody's been talking about how, CapEx is still pretty weak from the U.S. corporate sector and money spent on buybacks instead. But 5% now, 5% of total U.S. company CapEx is coming from companies who are losing money. So that's up from almost nothing. So if you look at the whether it's Uber or WeWork or any of these other companies that are hemorrhaging money, it's because of the free capital they're getting from the central banks that they're able to just, I don't want to say flush money down the toilet, but they're basically just spending with no parameters whatsoever. And so as CapEx, as the bigger percentage of CapEx becomes these companies that are losing money, you start to see this as clearly unsustainable. And so that's just another thing to kind of keep an eye on is the speculative kind of mentality that's happening as a result of central bank liquidity that's driving activity that is something worth watching.
All right, so there's a couple stocks here that you're bullish, and these stocks. One is really out of favor here. Had a good day yesterday, 2 days ago. Let's talk your bullish scenario here for Boeing. Came down to the bottom of the trading range, held that trading range, traded up to 335.25 yesterday here. So is this a technical thing where you're looking at the bottom of the trading range, or what's your bullish scenario for Boeing?
Well, so I think that there's a few things. First, the Boeing, it's not going out of business, and I say that, and I don't mean that in like a cavalier way. It's still a duopoly. The 737 MAX at this point, right, even if you assume it's never coming back, right? You're almost at that point where you've sort of priced it in. Mm-hmm. Here to 300. You've got, almost $1 trillion worth of defense spending every single year. That does not appear to be stopping anytime soon. You've got a holding base that's completely turned over. And I think this is probably the most important thing. The funds who've bought this stock over the last year are either GARP funds or, growth at a reasonable price or some value types. These funds that bought this stock over the last year and took all the pain and the headaches and everything of this story, they're not sellers at 375. They're not going to trade this. They're investing in this because they think that the stock can go to 400 to 500 in a couple of years once this is kind of cleaned out. And so to me, that's probably the most bullish thing. But the other thing is, look, we've seen this before, right? Multiple times where a company has a major issue, and then, what's going to happen in 2020 is people are going to say, well, they're lapping all these issues, and the compares are going to get easy and easy and easy. And then all of a sudden, one thing will go right, and you'll see the stock rip again. And so I just think that you got a pretty good upside downside scenario here, where I think 300 is I mean, unless we just fall into a complete recession, 300 to me is sort of the it's not going below that. And if anything goes right in 2020, as people start to look at 2020 and 2021, and that's how people kind of look at a name like this, you could get 425 by the end of the year. So I think here it's a pretty good stock to own, and it's a real company with a real secular tailwind. So that to me, and consensus obviously is pretty negative on it. And whenever I think some ratings agency downgraded it. So whenever that starts happening, that's usually the bottom.
All right. Another stock that you're bullish, and I'd say you've been bullish for quite a while, going against the crowd here. Netflix trading up 319 here in the pre-market, 23.99. Came out with some bullish statistics. Was that yesterday or the day before? Some subscribers, subs statistics that gave a boost to the stock. What are you looking at here on the long side?
So clearly, sentiment's pretty negative. I think boiling it down is the fear of sub loss to Apple and Disney is so wildly overblown, in my opinion, that people are missing the forest through the trees here. And there are what I think the biggest thing people don't appreciate is there are a large percentage of Netflix's subscribers only use Netflix. And I think that, those of us who are on the coasts and have 70 different streaming services, that doesn't make any sense. But there are a lot of the 160 million subscribers that Netflix has. They don't have any other services. So it's not like they're saying, well, I've got all these services, I'm just going to cancel Netflix. What they're going to say is, well, why, I'm only paying for this. Why would I just cut this to just join something else? And so I think because of that, the subs are a lot more sticky than people think. And so I think this belief that there's going to be some mass exodus is just, it's wrong. I don't think that's the case. And I think that's the opportunity is as they report, that people are going to start to see that, okay, maybe this isn't having the same effect. And at 160 million subscribers, if there is the streaming wars, right? Well, who do you want to own? Do you want to own the companies that have no subscribers and are trying to ramp a business that maybe in 5 years will have, 50 million? Or do you want to own the people out there that have the scale that in a streaming war will survive? And not only that, but at some point, the Uber bull case on Netflix is they're going to raise price. And so once, you get through this kind of the headlines and all the noise, you're going to have a company that is still the dominant player in streaming, may have the ability to raise price. And it's not like, credit, if you're worried about credit, then you should worry about the whole market. But right now, the liquidity that's out there is allowing companies like Netflix just to continue to ramp spending on content. And so what's the bear case? If they're just going to be able to raise money and continue to add good content to their slate and therefore keep their existing subs and add subs here and there as around the world, I just think that people are way too negative on the stock. And I think it gives an opportunity to run towards that old high.
Well,
Hey, Ian, Dennis Dick here. I just want to comment too, because I have been one of those bears and I've been wrong. I mean, the stock has been moving up here. I've been bearish for about a year. So I started getting bearish in the 300s. I went down to 250 in the summer. I kind of look like a genius, and it's back up here at 320. And I think a lot of the stuff that you're saying is true. And, I've been on the other side of it saying, look, it's got a nosebleed valuation and competition is coming. I don't like that combination. I was even saying it a few days ago. It's why I'm not long the stock. I'm not short the stock either, because you know what? The technicals don't allow me to short it here. The stock just continues to show relative strength despite all these worries. So it's been climbing that wall of worry. I still don't know if I want to pay these kind of valuations, just because I do, you got Disney Plus, you're going to have Comcast. I can foresee in like 2 or 3 years, 7 or 8 different streaming services here. So the one argument for the bears has been, wow, you got Disney trading 22, 23 times earnings. They have all the parks, they have everything else behind them. They don't really give them, and then you've got Netflix trading 70 or 80 times forward earnings. Is there going to be some type of, contraction in the Netflix multiple and expansion in the Disney multiple? I don't know. It's such a small piece for Disney. Maybe that's not going to happen, but competition is coming. The question is this multiple sustainable? That's more the question. I don't believe that they're going to start losing subscribers, but if the growth starts to slow, does that mean that the multiple contracts some? And it looked like it was going to in the summer, but I'll tell you right now, the technicals are saying no.
Yeah, I mean, I think that those are all fair points. I mean, there's certainly there's no question that there's competition, and it's going to increase, and that Disney certainly has the muscle, sure, and Apple does too. I mean, they have the muscle and the balance sheet to really kind of make a dent in this. I feel like when one looks at sort of the scale of the businesses, they're Disney and Apple, but they're starting from zero. And so, it just takes a long time to get people to a point where they're going to, start to really look at these as alternatives as opposed to add-ons. And so I think that we'll see. It's hard. Things could go wrong for sure, and I've been wrong plenty of times. But I do think in this case, people are way too bared in on this company right now.
Ian, I want to get your thoughts. What was your reaction? Just one more on the Netflix, and we'll wrap up. But what was your reaction to Netflix releasing that international subscriber growth data a few days ago here? The glass half full reaction is like, well, look how great their subscriber growth is in other markets, and the glass half empty is, well, yeah, they're just trying to distract us from their subscriber growth not growing in the United States. So what was your reaction to their releasing of that data? Because we don't get data from them very often.
Well, I mean, I think that people who are expecting this huge subgrowth in the United States, I don't know where they think that's all going to come from. I think the U.S. is pretty saturated at this point. I think the U.S. is more of a price increase story at some point. I think it's just important for them to, they probably figured, they're not, that they see everything else and all the negativity as well, that it probably doesn't hurt to just remind people of, the addressable market out there is obviously the entire world. And, the content that's being made for Netflix is global. And so I just think it's a reminder that people, take a look at the story on a holistic view and not just into the United States and even not just in Europe. And so I look at it as, a reminder. I don't, it's certainly not a reason that for me to change my view or add more stock. It's more just like, okay, yeah, that's true. And let's hopefully people just step back and say, well, all right, yeah, that is true. And maybe before I just start, assuming the stock's going to be a zero, I should realize that, them and HBO are really the only two who have massive scale right now.
All right. That's a great discussion there on Netflix. Just one stock that you don't like, and probably agreeing here with Goldman Sachs, Macy's. You're bearish, Macy's. Mm-hmm. Give us your scenario.
So here's my Greek mythology for the day. Macy's is sort of stuck between Scylla and Charybdis. in the sense that, the six-headed monster on one side, from the Odyssey is Amazon and Walmart and all these companies with massive scale and massive online operations that can simply price them out and deliver the same goods that they have at a much easier and rapid pace and cheaper. And on the other side, the sort of whirlpool that they're falling into is, the Ross stores and the TJ Maxx and the Burlingtons of the world that offer an experience for shoppers that's Amazon proof. It's a treasure hunt. People for whatever reason like to go and find stuff that brand name stuff that's very cheap. And so from both of those ends, that's where Macy's sort of stuck in the middle. And it's unclear to me there's a strategy to get out. And I don't know what's going to happen to Macy's, but I think that given the enterprise value is still pretty big, I don't see any reason why this stock can't go into the single digits next year.
We've been on the line with Ian Weiner, as I mentioned at the top. He's an advisory board member at Bellator Asset Management, also author of Ubiquitous Relativity. Ian, thank you so much for the time today. Have a great rest of your year. Have a great holiday season, and we'll talk to you again in 2020.
You too, guys. Thanks a lot for having me.
All right.
Thank you. We kept him a while there, but it had some good input. I'd like to hear, the other side of the coin on Netflix.
Oh, for sure.
Yeah, it's always good. And he's made some good calls on this show. Remember when we were talking about Beyond Meat a while back and the thing was going up, and he said, a lot of times these stocks get out of control and have major runs, but a lot of times they come back to roost. And
I think the point Ian made, and I remember that time on the Beyond Meat, it was such a fabulous point, was he's like, when you see these stocks with these incredibly, high short interest and, on these high flyers, nosebleeds, a lot of times these guys and girls end up being right. It's just a matter of, can they hold through all the pain of, and can they even, are they allowed to hold? I mean, because the locate was so tough. So, when you get these $8 billion valuations on a company that makes veggie burgers, I mean, it doesn't seem, like it should be there, but the market can stay irrational much longer, it can stay solvent. So long run, I'm not buying that because I think eventually it's going to come to roost, but can you hold through it all? And I think, shorts learned a hard lesson there on probably even, on hard to borrow stocks. If you hadn't done them before that, when you can't find the locate, you can get bought in. And I do believe there was some buy-ins over 200. And I think that's why we've seen the ridiculous
move, remember that
where
day?
there was people, and obviously you don't know that for sure, but the locate was always tough. And if you have a locate with the broker, the way the buy-in works, and all of a sudden your broker can't get the locate, they'll send you a message and say, look, we can't locate the stock, you got to cover it in. If you don't cover it in, we will go into your account and cover it because we have to stay in with SEC regulations here. And I do believe we saw some buy-ins over $200. So, here you are, you could be right, you could know you're right, it doesn't even matter. The broker's not going to allow you to continue to hold it short because those are SEC regulations. Don't have a borrow, can't stay short.
No, that's right. That's right. And those borrow costs were extremely high.
Extremely high as well. So when you see these really high extreme, and I think he was making that point too, these really extreme high borrow costs, they usually end up being right too. So these aren't stocks you want to put in your long-term portfolio. But at the same time, you can trade them and there can be squeezes, and sometimes those are indicative of squeezes. So there can be good trades out of those things as well. Man, we're quiet here, this market.
I know. And I think that's the way we're going to be for the next couple.
I think we're getting into holiday trade here now. I mean, we had the impeachment. We didn't even talk about that. I mean, it's going to be, sorry, Trump bears here, but it's going to be a non-event. And Kramer summarized it good last night. I mean, yes, he's been impeached by the House, but it's not getting through the Senate. There was no Republican. Was there any? I don't think there was any Republicans that voted for impeachment last night. Was there?
No, it's just crazy to look at like the S&P reaction to Clinton's impeachment and Nixon's resignation and yesterday.
And there's no reaction at all.
Completely different. I mean,
well, they know this is not getting through the Senate. You got to get 20 Republican votes to get them convicted in the Senate to get them out of power. There's no way you're getting 20 Republicans. I don't care what kind of strings you pull. The market's saying there's no way. There's no way. And I'm not saying I love Trump, I hate Trump. I'm just saying there's absolutely no way this is getting through the Senate.
That's what the market says.
The market says that everybody, you can do the math. It's, Trump bears have their day last night, he gets impeached, and maybe it's a tarnish on the record, but you're not getting him out of power because this is not going through the Senate. there's no way you get, I don't care who you whip and what you do on the behind the scenes. There's no way 20 Republicans in the Senate are coming over and, convicting.
Well, I mean, maybe Frank Underwood could whip some people.
That's all you need is Frank
What are you
Underwood in
doing,
here.
Netflix?
That would be a
Oh,
shot.
yeah.
If Frank was here, there'd be a shot, Spencer.
Right. Maybe if Frank were a real person.
Too bad that show went off TV, man.
It was good.
Yeah, it's like-
That's how you learn about whipping and all that. I mean, it was
I know.
extreme. I'm sure.
As soon as you said whip, I was like, you don't know how American government works. You got that line from
I got that right from House of Cards. I'm Canadian.
Yeah, there's no way you know what that term means.
He does.
House of Cards,
man.
baby. They teach me my politics. They teach me U.S. politics, the House of Cards. Isn't it like you're murdering everybody behind the scene to get your way? That isn't the way it really works.
Of course, you know that. I mean, or you have someone else murder them, so it's not pinned on you eventually. That's the way you need to do it. But well, let's wrap things up for today. Quiet range, pre-market low 94.50. The only significant formation here for you pattern traders, we do have a triple top up there Monday, Tuesday, and Wednesday. 32.0250 to 32.0350. Those are three highs in a row. I mean, someone just has a good to ever order, it seems like, at that area, but that's what the key. That's what you need to bust out here to do some more work in the 3,200 handle.
All right, that's it for us. Catch our podcast, iTunes, SoundCloud, Stitcher, Spotify, TuneIn as well, or we watch our show on youtube.com/Benzinga TV. Please remember, all the information from our show is meant to be used as informational purposes only and not for investing or trading advice. Thanks to our guest, Ian Weiner. Thanks to all of you in our chats, both on YouTube and premarket.benzinga.com. Everyone have a great rest of your day, and we'll be back with you for a final show of the week on Friday.